It's on the country's largest car maker, commanding around 50% of the market share. Maruti Suzuki, good run over the years, but the recent slowdown has hit the company hard and it's reflecting on the stock price. Yash, though, has sifted through the monthly numbers and different models and tries and brings out what is hurting Maruti, though. Something beyond the obvious. Yash, good morning.
Morning, Neeraj. Actually, the pain has been around for quite a few months now, and that is evident in the stock price, like you said, because on a year-to-date basis, Maruti is down almost 8%, 7.5% with yesterday's move as well, while the Nifty Auto Index, that is down only about 6.5%, and Maruti commands almost 22.5% of the overall weightage of the Nifty Auto Index. So clearly, the only place where it has been outpacing the index, that is in terms of returns, which have been far lower. One of the primary reasons for this for the car maker is that it hasn't been able to sell enough cars. Now what we've done is that we've taken a longer term picture of the last 20 months of how the sales have fared, and what we see is from the month of June 2017 to June 2018, the sales have been largely good. They've been in the mid-teen, so the high teen to 20% kind of range, but moving on from there to July 2018, so over the last 8 months, the picture has been absolutely disastrous. 3.4% drop in sales in August, which was the highest in a very long time for the company, and 6 out of the last 8 months, the sales have been negative for the company. The only 2 times when the sales were positive, it was only a marginal uptick, about 0.2%, which it did on both the occasions. The primary reason for this is the fact that the liquidity crisis spurred by the IL&FS crisis, the weak consumer sentiment which affected the festive sales. While they have been broad-based reasons which not only just affects Maruti, there have been other reasons, the primary of which is the fact that their new launches haven't done very well. So they came out with the new WagonR for the 2019, as well as the facelift for the Baleno, as well as the Ignis. The waiting period for WagonR when it launched back in January stood at almost 2 to 3 months. That number has come down now to almost 4 to 6 weeks. The Baleno and the Ignis, both of which have not seen a significant surge in demand, and most of the analysts that we spoke with, as well as the 2 dealers that we spoke to, confirm the same, that the new launches, they haven't been able to enchant the customers. Also, going forward, what we've done is take a look at what has been the discounting. The drop in the sales, or the consistent weakness in sales, that has prompted the dealers to continue the year-end sales into the 3rd month, which is the first time that they've seen in a very long time. And these discounts, they go up to as high as 60,000 rupees for some of the marquee cars of the company. So the likes of the Baleno, Brezza and Desire, which up until a year back had waiting periods of over 2 months, they are now selling for higher cash discounts, or going up all the way up to 60,000 rupees. What we've also done is that we've taken a look at the utility vehicle space sales. And Neeraj, this is the fastest growing space in terms of the overall auto industry, and a sub-segment of that is the compact SUV space, which is completely dominated by Maruti with the Vitara Brezza, which it launched back in February of 2016. It has been selling like hotcakes, as the top seller for the company as well as for the industry. But what we've seen again over here, the trend is that the sales have been slowly and steadily coming off. Again, these numbers used to be well in excess of 20 to 30% in terms of volume growth over the last several months. But again, since the month of July or the August of 2018, those numbers have started coming off. Only a marginal increase of about 7.4%, which we saw in the month of February. Now, this could be on account of the stiff competition that the company is likely to see from the new launches from the competitors. The Nexon, which came out some time back, it has been received extremely very well. It is the cheapest of the 3 cars over here. The XUV 300, which Mahindra launched recently, there are several media reports which suggest that the bookings have crossed 13,000 mark, and the company targets about 15% market share in the sub compact SUV space, which would be a big dent as far as the auto sales for Vitara Brezza is concerned, and overall for Maruti going forward.
So wonder if the NBFC pullback since September also had some part to play out here. The lack of financing. Some quarters have cited that it had happened, some quarters said it didn't. But all of that notwithstanding, Yash, valuations, even despite the cuts, what's the kind of picture that the valuations are painting?
So Neeraj, even on the valuation front, the stock continues to remain expensive over its historical average. So its FY19 P stands about 27.3 times. Its 5-year average is about 23 times. So that is again a premium over its historical average, despite the kind of fall that we've seen. Let's also take a look at the analyst recommendation picture, and a key difference over here to note is that almost 40 of the 50 plus analysts that track the counter have a buy rating on it. But 6 months back, that number stood at 36, and the return potential was almost 10,000 rupees. And that target price, that the Bloomberg consensus target price, is now down to 7,509, which is a more than 25% drop in its target price over the last 6 months. So while there are more number of analysts which are bullish on the counter now, the return potential or their return expectation from Maruti, they have moderated significantly.